most common questions I hear is, how much equity do I need to have to qualify for a reverse mortgage? And the answer is, it really depends. So I've seen homeowners with 50% equity qualify, while others need 70% or more. The reason is that reverse mortgages are based on several factors. This includes your age, the value of your home, and then what's going on in your credit life to possibly need something called a life expectancy set aside. So it's really important that you talk to a loan expert in reverse mortgage who can help you figure this out. So I'm going to break down some basics for you that will help you see if you're ready to go the next step and talk to a loan officer. I'm going to explain exactly how the equity requirements work. I'm going to give you some simple examples and explain why two homeowners with the same exact home value might need a very different amount of equity. So let's jump into it. The first thing to understand is that reverse mortgages don't have one universal equity requirement. Instead, the amount you can access is based largely on two things. Number one, your age, and number two, the value of your house. So generally speaking, the older you are, the more money becomes available through a reverse mortgage. That's because statistically, older borrowers are expected to have the loan for a shorter period of time. So when people ask how much equity they need, the answer often comes down to how much of the home's value can be accessed based on their age. So let's use a simple example. Let's say a home is worth $500,000. If the borrower is 62 years old, which is how old you need to be to do a HECM, they may need about 70% equity in the house. That means they could have a mortgage balance of roughly $150,000 or less, and it would work. So let's look at somebody who's 72 years old. Because they're older, more funds become available. In this example, they may only need to have around 60% equity. So that means they could potentially owe around $200,000 and still qualify. Now, let's look at the 82-year-old. Because they're even older, they may only need around 50% equity. In that case, you could potentially owe or get back $250,000 on that same $500,000 house. The really important takeaway is that the older you are, the less equity you need because a larger percentage of your home's value can potentially be accessed. Now let's talk about one of the biggest factors that people don't know about, don't think about. Most loan officers who don't do a lot of reverse mortgages don't even think about. So it's really important, again, that you talk to a reverse mortgage expert. That's called a LESA, L-E-S-A. And what that stands for is Life Expectancy Set Aside. A LESA is essentially a reserve account, like an impound account, if you've ever had an impound or an escrow account. It's established to make sure future property taxes and homeowners insurance is paid. So whether a LESA is required depends really largely on the financial assessment that's completed during the loan process. This is where your payment history becomes so important. Many people think that they need to have perfect credit to get a reverse mortgage, and that really isn't true. I've helped a lot of homeowners who qualified and they did not have perfect credit scores. But what we're really looking for is how you're handling your financial obligations. For example, are your property taxes being paid on time? How about your homeowners insurance? Has that been on time for the past 2 years? Your homeowners association? Are you late on other bills? Anything in collections? Are you currently behind on your mortgage? If the lender sees significant concerns, then a LESA is going to be required. So this is why a LESA matters. If a LESA is required, part of the available reverse mortgage proceeds have to be set aside to cover this future tax and insurance. And it can be a significant amount of money because they're going to take the actuary table and figure out how long they think you're going to live. And they're going to collect enough money for that entire span of time to pay the taxes and insurance. See where I'm going with it? You got to have a good chunk of equity if you've had some issues with your credit. Doesn't mean no. It just means that you need to be really upfront and honest with their loan officer when you're talking to them if there are things financially you've been struggling with. How much equity do you need for a reverse mortgage? The answer is simple. It depends. Age matters, home value matters, current mortgage balance matters, and whether a LESA is required can make a huge difference. As a general rule, older borrowers typically qualify with less equity because they can access a larger percentage of their home's value. If you'd like to find out more about your specific situation, what that looks like, the best thing is for you to talk to a loan officer who is an expert in reverse mortgage and can run your numbers for you. You've got to have your date of birth ready. If there's a mortgage balance on your home, then have that balance ready and be prepared to have a conversation, an honest conversation about how you're doing financially with your bills. Every situation is unique, and a quick analysis can usually give you like a good idea of where you stand. So if you have any questions, let's have a conversation and see if this makes sense for you.